Today, I'm going to show you 3 Japanese stocks that are directly benefiting from the AI data center boom. One of these Japanese stocks could potentially become the craziest performance story of the year. You'll find out which 3 stocks those are in the video right now. But before we begin, a quick disclaimer. Everything I say is not a buy or sell recommendation, nor is it financial advice. It is merely my own opinion. Yes, when you think about AI data centers, you really can't get around the topic of photonics, and I've already made a few videos about it on my channel and introduced some stocks, mostly from the US market. And now I would like to take a moment to introduce you to 3 exciting hidden gems from Japan that you might not have on your radar just yet. Well, Japan. Japan is, of course, also a very, very interesting market because it's also a very tech-driven market, and that's where the local players are particularly interesting. Let's start with the first stock, and the first stock I'd like to introduce to you is Sumitomo Electric Industries. It's a Japanese industrial group with 5 business divisions, actually. It consists of automotive, wiring harnesses, power cables, fiber optic cables, and electronics. So it's more or less a conglomerate. But that makes the whole thing all the more exciting because it's not a high-risk investment in that sense, but rather a broadly diversified corporation. And the area of fiber optics and photonics is the growth driver here, which should be particularly interesting. Back in 2023, the company became the very first in the world to launch the mass production of multi-core fiber optic cables, which are essentially fiber optic cables that consist of multiple individual strands. And in doing so, they have set a new standard for AI data centers working right alongside other major American firms such as Corning. But to put this into perspective, let's first take a look at the overall market, because that's what matters most, whether the underlying market behind the companies can actually provide the necessary growth. And if we look at where we've come from, or rather where we're headed over the next 5 years, the market for AI photonics, silicon photonics, is expected to roughly triple over the next 5 years, which corresponds to an annual growth rate of 25%. And accordingly, also offers very, very good opportunities for the companies I would like to introduce to you. And we're looking at the major players here, the Japanese fiber optic giants, to call them that. And before we get into the individual stocks, maybe just briefly to understand why the subject of fiber optics is so important. After all, what good are the fastest AI GPUs from NVIDIA if they can't be networked together? And that's where these fiber optic cables come into play, which nowadays don't just consist of a single fiber, but of almost 14,000 individual fibers. This serves as a key driver for this technology, and Sumitomo stands out as one of the major players, and it is clear that they are positioned in a very, very broad manner. As I mentioned earlier, the revenue forecast was recently revised upward, and earnings per share growth over 3 years was 160%, which is quite significant. And in March, as I mentioned, the big announcement with Corning, or rather setting the standard here for AI fiber optic cables. The company is growing nicely. We even have a small dividend yield of just under 1%, which doesn't happen all that often in the tech sector. Also a little extra, a small bonus, so to speak. And here we can also see the revenue breakdown, the revenue diversification. And here it is quite clear that automotive is, of course, still clearly the revenue driver, which can, of course, also be seen as a bit of a risk because the electric vehicle market in particular has been struggling a bit lately, and because that naturally also represents a certain dependency on the automotive market. But as I said, the major growth driver or the future is really playing out in the fiber optic and info communication sector. And that is the hope of the stock market, that this sector will gain significant momentum. To be clear, if you do not have a genuine pure play when we are talking about photonics, that is naturally going to lower the risk. But of course, it also lowers the potential for explosive upside. Though, if we take a look at the stock in a moment, we see that the share price has actually already exploded quite significantly. In the last few years, the stock has more than quintupled and has in the last few months made a parabolic move. I'm looking at the logarithmic chart. The stock is trading just under 10,000 yen, a high level, And I'm curious if this journey continues. From a technical perspective, the trend is intact. We're in an uptrend waiting for the 20-week moving average to act as support. So the price can reach new all-time highs. But with a chart like this, the question naturally always arises, is the stock too expensive? And let's take a closer look at that, because the valuation for the stock has, of course, already climbed very, very high. And that also prices in this strength, this potential, this future outlook. So the stock and the company need to deliver in the coming quarters. And sure, in nominal terms, a price to sales ratio of 1.6 isn't that high, but you always have to look at it in the context of the company. And here we see that historically it is actually elevated. Well, given that we are currently in a mega trend, I think it is definitely justified. And as I have said, the growth is certainly there. But setbacks in quarterly results can therefore always pose a small risk. Whether to get in at the current level now is always the tricky question. And actually, in such a hot market with such strong momentum, in my view, it's always interesting to enter in tranches. So bit by bit, also to avoid taking on the full risk that a correction might actually set in. As for where the stock might correct, I actually only expect a correction down to around 7,000 Japanese yen, because those CapEx investments, the ones going into AI data centers, photonics, and fiber optic cables, are simply there. That provides a certain safety net in terms of the downside potential here. Otherwise, as I said, it is a very, very broadly diversified company. The price earnings ratio has naturally shot up in tandem. But what must be said is that the net profit margin has also become increasingly stable recently. And the question is, can they expand the margin here? That would, of course, also mean that the stock still has room to grow. As such, the gross margin has also shown a steady upward trend in recent years, and that is exactly what we want to see. Rock-solid companies that are gradually expanding their margins in small steps. Well, that is precisely the factor that ultimately underpins the steady rise in the share price, and it could very well lead to further gains in the stock moving forward. Let's move on to the next company, and it's also a very, very exciting one. That's Hamamatsu Photonics. And it's a really interesting technology that the company is building here, because they build devices that can measure light so precisely that they can detect individual photons. Now you might think, okay, why is that even relevant? But that's especially important in AI chip production, specifically when it comes to inspecting the chips, because before these chips are installed in data centers, they have to be tested extensively, and that's where these photomultiplier tubes from Hamamatsu come into play. Man, this company holds over 90% market share here. So we're dealing with a monopolist in this sector that has such a moat that it accordingly cannot be pushed out of the market that quickly. And if we take a look at the stock, we might actually be seeing one of the most interesting stocks that I want to introduce to you today. To begin with, I would point out that this particular stock has not been performing nearly as well as many of the other options we have been looking at. Furthermore, we are currently finding ourselves right in the middle of a difficult bear market, or perhaps we are just on the verge of finally exiting it. You might ask why that is the case. Well, it is primarily because both our overall profitability and our net margins have seen a very significant decline over the course of these past few years. And I assure you, there are some very real underlying reasons for why that has happened. Yes, well, the company, to say this up front, is not in a bad position. Rather, this decline in margins is simply due to the fact that there were CapEx investments and acquisitions made, and that has put pressure on the margins. The company has the forecast for the quarter maintained, or rather the outlook maintained, even though the first quarter of 2026 wasn't actually all that strong. In fact, it's best described as weak. That naturally leaves room for speculation, or rather the potential that the rest of the year could turn out to be very, very good. We are not just at home in semiconductor failure analysis for AI chips with our products, the photomultiplier tubes, but also in medical imaging, quantum computing prototypes, and particle physics. And so a very, very broadly positioned company that doesn't just cover one mega trend, but many others. And that's why I actually find the company exciting as a turnaround candidate. And where do you still find companies these days that have a quasi monopoly with over 90% market share? That's actually, in today's world, well, not even that realistic. Let's take a look at the valuation, and it's clear to see that the stock has pulled back, and accordingly the valuation of the price to sales ratio was at one point at a peak of over 7 here, which is of course very high for a Japanese stock. And in comparison to that, the last stock is actually still relatively cheaply valued. But you always have to take a closer look at the company's history, and in that regard the Hamamatsu Photonics stock is really and truly to be considered quite favorable, especially when you are looking back at their performance or under the current circumstances, considering the fact that we are banking on a turnaround here and the management team is also feeling very positive about the whole situation. The PME ratio has increased. That is simply because the net profit margin and profitability have worsened. This just means that the earnings per share are lower. That drives the price to earnings ratio up. This means it's a normal movement that we're seeing. However, that issue can be resolved quite rapidly, which means the valuation could potentially decline again in the near future. That is precisely why I prefer to examine both metrics, specifically the price to sales ratio, as it is far less diluted than the standard price to earnings ratio, allowing you to obtain a much clearer and more comprehensive overview of the company's business. Now, let's move on to the last company I want to introduce to you, and that is Furukawa Electric. And the stock has also performed very well this year. The company has a very long history. They've been manufacturing cables since 1884, and through their US subsidiary Lightera, they've become a key supplier for AI hyperscalers today. And I found that particularly interesting during my research. And in March 2026, the company started mass production of a cable that packs these very same nearly 40,000 optical fibers with a diameter of under 40 millimeters into a single cable. And this is actually the thickest, most robust fiber optic cable in the entire world, setting new industry standards to dominate the AI data center space in terms of high-speed cabling. Now, let us take a closer look at the stock, and it is clear that the stock has already performed quite well for all the investors. Much like the case with Sumitomo, the stock has basically increased by more than tenfold in recent months, or rather over the course of the last few years. And honestly, it's fair to say right off the bat that after such a rally, it has already quadrupled since 2026. You could just wait for a significant pullback before jumping in. Yeah. A larger pullback might not look like much on a chart, but in terms of actual numbers, it can easily be 30%. So honestly, I would be cautious at the current level, but given that they have such good technology and are essentially setting new standards with their cables and are also gaining a foothold in the US market with their US subsidiary Lightera, that of course makes the makes the Asia and the company quite interesting. And if we take a look at the valuation here, which we can best compare with Sumitomo, the first stock we looked at, the price to sales ratio also rose to over 2, which was surprisingly high for the stock. And that just prices in, or rather it's the exact same picture we are seeing, that the photonics market is booming and that the stock market is extremely optimistic that significant growth is still flowing into these stocks and companies. And what I also particularly like is that the price to earnings ratio has naturally risen accordingly. I don't think we need to say much more about that. But what's even more important is that the net profit margin also continues to rise accordingly. And that is precisely what justifies higher valuations and in fact a PE ratio of 55, given the prospect of increasing margins through technology and demand. That is exactly what gives the stock more room to continue moving higher. That means in the short term, it might become quite an interesting play if we see a pullback. And I want to be perfectly clear that this is not intended to be taken as professional investment advice, but you are looking at a company that is truly technologically fascinating. It is exceptionally well positioned and stands out as one of the most compelling options available. However, the very strength of their recent performance does introduce a degree of risk, as I previously mentioned, particularly when we consider the short-term outlook regarding the about potential stock price corrections. So that was basically the most important information regarding Furukawa Electric. Feel free to write in the comments what you think of these 3 stocks and which other stocks you might know that we haven't discussed yet. And at this point, feel free to leave a thumbs up if you enjoyed the video and subscribe. I would really appreciate that. And if you especially liked it, feel free to share it too. That will really help my channel with the algorithm. And then I'd say, let's leave it at that. And I hope you enjoyed the stocks and that I'll see you in one of the next videos. Until then, I wish you all the best, good luck, and bye.